Take a little trip, take a little trip, take a little trip with me.
Hello and welcome to this edition of Driving Forward's Tuesday Trip. It is August 6th, and I appreciate you joining me today. Today I'm going to talk about interest rates. Just had a few conversations, and with the Fed looking to drop interest rates and with market conditions, just wanted to talk about them. They're one of the leading indicators that I watch on a daily basis. So, just indicators for freight in general. Interest rates, one of the number one indicators. Automotive, construction, consumer spending. Just being an old trucker and kind of what I monitor. Those when those are all looking good, homes, how the housing market's doing. When those markets are all doing well, trucking is doing well, and none of that usually moves until interest rates move. And I've been around a while, so coming up on 30 years in the industry, I've seen a few cycles, and I decided to go look at a chart here that I'm going to share with everybody. And I was kind of surprised at what I saw. For a long time, we lived in a world where there was really low interest rates, and a lot of us own homes that have very low interest rates to them. And those who are buying homes right now are experiencing some pretty poor interest rates, or at least what we consider are poor interest rates. But when you go and you look historically, it's not so bad. It's just bad over the last 15 years comparatively to what it is right now. So I want to share a little bit about that, and then I want to look at the numbers on how they apply to businesses today, because we're going to talk in 15-year segments, because many of us don't have businesses that have been around 15 years or longer. If they are, we're on generational cycles or those type of things, and we haven't seen interest rates that have been this high in a long period of time, which sounds kind of odd. We're at 5.5% right now, and have been for over a year, that's a long time. And we actually escalated pretty quickly up to 5.5% too. So I'm going to share the screen. This is the trade economics. If you're familiar with this website, it's tradeeconomics.com. Check it out. It's got all kinds of cool information to it. You can pay for it if you want to. I just like to mine data audit from time to time. So this opens up with a 3-year view, and you start off at the quarter interest that we were at back in, and this is the Fed rate back in 2022. And then we see it stepping up from there. But, I want to zoom this out to max and talk about, if we go out to a 10-year, we see some cycles here going back into 2019 when we were raising the rates back then. But I really want to zoom it out to max and show you what this looks like over a much longer period of time, and then talk about 15-year increments. So currently we're in 2024. If we go back to 2009, which takes us back to when things weren't so great, that's when this 0.25% interest really started. Prior to that, we don't see that on this chart at all. So 2009. So if we've been in business 15 years, which I could probably do an overlay here at some point, but I'm not going to get into this. I don't want to make it a 30-minute discussion on how many businesses started in 2009. I'm going to venture that it wasn't a hot market to start a business. So in 2009, a quarter interest for the most part started, right? So for 15 years, we've rarely seen raises in interest rates at all. We've been sitting down here and lulls for a long time. It's a little bit of a spike here, 2014, 15 up through 2020, but that peak was 2.5%. That's nothing comparative to 5.5% that we are now. But it went back down through the COVID period and climbed substantially. So 2009, right, was when that started. 15 years we've sat at that with just a little blip over a few year period. So that few year period was 2020, starting back in 2015. So 5 years we had a blip that peaked at 2.5%. That's still very low comparatively, second lowest period of all time. That at 2.5%, second lowest period of all time. So we take 2009 and we go previous to that, and we go back 15 years to 1996. Now, during that period, the average interest rate for the most part was slightly below 5.5% due to this blip in the early 2000s. But otherwise, a healthy interest rate was in or around 5%. So, back then, it was normal to operate at 5% interest. And now the new normal is to operate at a low or no interest. So it's no doubt that many businesses today are feeling pain with a 15-year stint. We've learned how to operate under scenarios where there's little to no interest rate on any of our capital investments, where 30 years ago, that was not the case. And then previous to that, we keep hearing, well, back in the 80s, the interest rates were wild, and they were. If we were to experience that today, I think we would have a catastrophic event that would destroy our economy very quickly. But I don't think we're going to be experiencing that from all intents and purposes. We hope to experience, a 1.5% to 2% interest rate drop here in the next month. Or in the September review. So I wanted to show what this looks like for trucking. And I'll shift my screen here and share a Excel spreadsheet that I put together for everybody. So this is a truck today. So just say you have $175,000 that you spend on a truck, and you have little to no down on it. So at a 7.5% or 8% interest, this would be today or tomorrow if the interest rate drops, and this is today under a 10% interest rate. Now, some people can get loans better than others, some, but these are the numbers I'm picking. So just off of a wave of a wand and a 2% interest rate drop, let's take that to 8% instead of 7.5%. So at an 8% interest rate drop, your payment's going to drop $173 a month, saving you $2,000 a year, or $12,000 over the life of a 6-year loan on a $175,000 truck. So that's substantial. Where we were operating at before was potentially, once again, dependent upon your buying power, was potentially this, where, the truck payments on a truck like this, of course, we didn't have $175,000 trucks back when we were running. Well, we did, but 10 years ago, we didn't have $175,000 trucks. So we also wouldn't finance them over 6 years. But regardless, sometimes you're financing them over 6 years, to be honest with you. But you're saving $423 a month based on the old numbers. So if we get back to a point where you can finance at 5% or lower, that's $400 a month. That's a lot of money, $5,000 a year. For an owner-operator, that's a substantial amount of savings. For a fleet, on an individual basis, one can debate, well, that's not a lot of money. But if you take that times 100 trucks, that's a lot of money. So that's a substantial amount of money on a monthly basis and on an annual basis. So just add 2 zeros to this. It's hundreds of thousands of dollars. No doubt that it would have a substantial impact to a business today. So then we go down and we look at this is what a $300,000 house looks like today. And this is the one that floors me. This is a $300,000 house at 8% interest today. 0 down. So call it a 350 or 300. Well, you're financing $300,000. I don't want to make the math hard. 30-year loan, $2,100 a month. So previously, you would have had a 3% interest, or through this is at 3.25 actually. So you're at 1305, and this is actually at 7.612. I should have made that read a little differently, but this is 7.612, and this is 3.25. But regardless, it's an $815 a month difference between these two loans for the exact same property. The only thing different is the interest rate. This is wildly different. Wildly different. Now, looking at this 7.62, so let's just take the 5.612. So the 2% interest drop is substantial. It's huge. The change that could potentially be upcoming here is massive. It brings it back down to a manageable number. Well, debatably a manageable number, but it's halfway to where we want it to go, or a good portion of it. Taking a $400 savings in this particular scenario on a monthly basis. But the wild side of this is it's $142,000 savings over the lifetime of this loan. So interest rate is everything when you're purchasing a home. But to be honest with you, paying down, not paying interest when possible is imperative. I think that's a lifetime of knowledge and awareness. Everything you do to reduce interest is important. But that's not what I'm trying to portray here. Just from a business standpoint, from a personal standpoint, this is the impact that a 2% drop can have to an individual, and now multiply that over the entire nation, and see how much that frees up to build on the economy. So it takes a while to build that confidence within the consumer. But you drop this another 2 more points and you get more consumer confidence. So for those that are aware of this, great. For those that are not, these are the numbers that we're working with here. So be aware of it. And those that are applying at the truck level, be aware of this. This is big numbers. So work to reduce down to 0 interest. Try to cash buy trucks. If you're an individual owner operator, do everything you can. Buy that truck, pay it down fast, keep making that truck payment to yourself, and cash buy the next payment, or cash buy the next truck, or put more money down and pay it down faster on the next truck, and do it again, and continue to do that until you can cash buy that truck, because this $30,000 over this life of this loan could have been in your pocket. And that's money that matters. So this week, Thursday, Chad Olison at 1 o'clock. 1 o'clock Central. Looking forward to meeting with Chad. Should be a great one. We have a special debate episode, so this will be a lot of fun. A hint, a little surprise, Robert Bain will be the moderator. I'm sure you're all surprised to hear that. But he just agreed to it today. We hadn't really worked that out. So we have Robert Bain as the moderator, and Chad Olison and I will be talking about leadership and sales. And we'll see how different we are in our opinions there. So that should be a lot of fun. I'm very excited about this. I've been looking forward to having Chad on the show. I think we agreed upon this date back in April, maybe. It might have even been May. But it's the only date we were able to make work. So very excited about it. That wraps up. This went way longer than I intended on chatting, but as usual, I am long-winded. And I'll see you next week. So thanks for listening in.